Hey everyone, welcome back to the channel. This is Amira Blake, and today we're diving deep into a part of Iraq's economy that's often overlooked, but could be the secret key to unlocking foreign investment and economic reform: the insurance sector. We're going to unpack not only what's happening on the ground, but also what the numbers really say, what the IMF and World Bank are pushing for, and how investors, especially those eyeing the Iraq Stock Exchange, should view all of this. Let's start with what was recently shared on CNBC Arabia, where Dr. Yasser Sabri Rauf, chairman of Al Hamra Iraqi Insurance Company, discussed the state of Iraq's insurance sector. Right now, Iraq has 38 registered insurance companies, but only 6 are listed on the Iraq Stock Exchange. That's your first clue. This market is underdeveloped. And here's the shocker. Iraq's entire insurance market is valued at just about 180 billion Iraqi dinars, or around 123 million USers. That's a drop in the bucket compared to regional neighbors. For perspective, Iraq's insurance penetration rate, which is the total premiums as a percentage of GDP, is less than 1%. Compare that to Jordan at 2.1%, the UAE at 2.9%, and Lebanon pre-crisis at 3%. That alone tells you Iraq has a massive gap and a massive opportunity. So why is Iraq behind? Dr. Rauf points to several factors: a low public awareness of insurance, a lack of trust, and regulations that still don't fully support modern insurance operations. While companies are trying to grow by targeting big construction and infrastructure clients, offering things like engineering insurance, the broader population remains untouched. That leads us into what's possibly the biggest hidden market: individual insurance. Right now, less than 10% of Iraqis have any form of personal insurance. Health and life insurance are practically unheard of unless bundled with a bank loan or employment contract. This is what's often called a blue ocean market: untouched, wide open, and full of potential if the public is educated and regulations catch up. But there are structural issues too. Iraq relies heavily on foreign reinsurers, mainly from Europe and the Gulf. This dependence causes delays, pricing confusion, and dense credibility. If Iraq could develop a local reinsurance system, it would keep capital within the country, strengthen trust, and improve claims processing. Let's talk about risk. Insurance pricing in Iraq is challenging due to the ongoing political and security instability. Many insurers avoid offering property coverage in areas near oil fields, borders, or regions historically affected by conflict. That's a big problem, because those are the exact areas where development and investment are needed most. And then there's technology, or the lack of it. While MENA countries like the UAE and Egypt are rolling out mobile-based insurance platforms and digital claim systems, Iraq still processes most policies manually. There's a huge digital insurance gap. This is where private tech firms could step in and help modernize the process through mobile apps, e-signatures, and instant claims tracking. On a more promising note, banks in Iraq are beginning to bundle insurance with financial products. This includes loan default insurance, mortgage insurance, credit card fraud protection. It's early days, but this is helping insurers connect with more creditworthy customers and normalize insurance as a part of everyday finance. Now, here's where international weight comes in. Both the IMF and World Bank have been urging Iraq to modernize its financial laws, including insurance legislation, as part of their economic reform packages. A recent report from the IMF specifically called insurance a necessary stabilizer for building investor confidence in Iraq's post-conflict economy. That's not just a suggestion. That's an economic nudge with serious weight behind it. And it's not just the West watching. Regional investors from Kuwait, Qatar, and the UAE are also paying close attention. Any move by Iraq to increase regulatory clarity, stabilize pricing, or digitize insurance could lead to strategic partnerships or even cross-listings on the ISX. That's exactly the kind of activity that excites foreign investors who are looking for high-risk, high-reward frontier markets. Now let's zoom out. Iraq's Vision 2030 strategy isn't just about oil. It's about creating an economy that can stand on multiple legs: energy, infrastructure, housing, tourism, and yes, insurance. Insurance is what gives these sectors confidence. It's what helps a foreign company say, yes, we'll build that road, or yes, we'll lend that money, because they know risks are covered. So, where does that leave us? Iraq has the pieces on the board: a growing banking system, active infrastructure plans, and international pressure to reform. But without strong, accessible insurance services, the entire economic structure remains vulnerable. The good news? The market is wide open. For Iraqi citizens, this means opportunities for greater security, health coverage, and peace of mind. For investors, it means a high upside play, especially if paired with political and digital reforms. Thanks for watching. If you found this breakdown helpful, hit that like button, drop your thoughts in the comments, and subscribe for more deep dives into untapped global markets. Until next time, this is Amira Blake, signing off. Stay informed and stay invested.